You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's blog gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/blogs today to sign up for regular updates via email. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
And hello there, people. This is not your normal host. This is the better, smarter, cooler version of Mark Longo, otherwise known as Mark Sebastian, and welcome to Volatility Reviews. For those this is your premier place to learn about all things volatility, and what a week for volatility it was. Now, I've got a couple of great guests with me. I've got my co-host, my partner in crime, my favorite future full-on doctor, but currently PhD minus dissertation. My favorite guy with purple glasses, Russell Rose. Welcome back, Russell. We've missed you. You were away, and now you've come home.
I'm just thrilled to be home. That's all I can tell you. I'm tired, but it's a good kind of tired.
I had a pleasant surprise earlier in the week. I was speaking at an RIA forum with CBOE, and lo and behold, who was in the room but my favorite employee of the CBOE that is male and not named Kathy Clay.
That's fantastic.
So I got to sit next to Russell, and we had a good time. And also back for a double header, back-to-back vol episodes. The king of Bend, Oregon. So sometimes called the king of Spain, but currently the king of Bend, Oregon. Bill Valentine, welcome back, Bill from Bend.
Thank you, Mark. Beautiful transitions. Nicely done stepping into Mark Longo's spot. I love that qualifying remark. My favorite employee at CBOE, who is not a woman, or Catherine Clay, Russell Rhodes. That was well done.
Well, to be fair, I guess that's a little redundant because Catherine Clay is a woman. So yes. I guess a little redundant there.
And this is shaky territory for any of us males to be dabbling in.
Oh my God!
As it relates to gender, let's back it up.
Well, I've got a meeting with Kathy next week, so hopefully she won't be too mad at me. She's my fave.
Wonderful.
But anyway, what a week! We saw a lot of things moving around, and lo and behold, it's my understanding, Russell, that something important just happened in the VIX futures. But let's wait until we do our actual segment on volatility. And with that, let's roll into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
Wow. That is nice. That is quite the transition there. So, Russell, something big happened today in VIX futures. I don't know if you know, but I don't know if you saw where the December future printed.
Where did it print? Where did it print?
Printed below 10. It printed
my
below
goodness
10.
gracious! Wow.
That is the first time an actively traded
Mm-hmm.
VIX future has traded below 10. Now, the individual VIX futures have settled below 10,
Mm-hmm.
and we've seen that.
We've never gotten that low.
No,
and
we've never.
And we're still down there. Wow.
Yeah.
I had not.
So,
I had not realized that we had never had the future below 10, like a trade.
Yeah.
So.
Yeah. No. But
is that what Eli was talking about on Twitter? Because I came across that.
I believe so.
Okay.
I believe so.
Makes sense.
And I could be wrong. I'm relying on Twitter to tell me that, and that's a dubious source. But the guys I follow on Twitter are pretty respectable VIX men. So hopefully they didn't get it wrong. But just an absolute demolition of the VIX future. They made an adjustment for Marco Rubio on tax reform, and it pushed vol way lower. Currently, like it or not, they're discounting any risk of government issues next week, despite the fact we have a pretty. Don't we? They still have to pass the budget.
Yeah, it's not a done deal.
No,
it's totally not a done deal. So it can happen. We've still got these things can fall apart at the last moment. So it's not done till it's done. It's not over till it's over. There are all kinds of yogiisms on this one. So
I agree. Now I believe you and I need to get to talking the RMC. I'm not sure if we've talked to you since RMC.
No, you have not. I have been working my way home, which took like a day and a half. But we had as always, we had a really good turnout for RMC. We had about 180 people come to RMC in Asia. It's a little bit truncated version. It's a day and a half over there. I led things off. We spent the first half day talking a lot about, CBOE products or things that are very specific to CBOE. And then on Monday morning, we had a keynote speaker who talked about the global economy. And then we had a fireside chat with Tyler and Cameron Winklevoss, who I actually traveled with throughout Asia. Those guys will turn you into, let's see, we're 9 minutes in. They will turn you into a Bitcoin believer. They really will. They're very passionate about this thing. They're very knowledgeable. It's not like they just took some of their capital and threw it into this market. They really are a big supporter and really do know this thing inside and out. So we had them do a presentation, and then the afternoon of the final day was a couple of volatility risk premium speeches, and then of course we always put the tail risk guys at the very end these days because it just hasn't worked out, so we relegate them to the to the very end, unfortunately for them. So good turnout. Lots of interest in all of the different speakers. I'm putting up better blogs. Normally I put up a pretty brief blog. I'm actually getting in the weeds with each of the RMC presentations. So over the next couple of weeks, I will have gone through all of them and added them to the blog site. So far, I'm only 2 of them in.
Oh, wow. All right. Well,
still,
I'm going to want to
tons of video interviews that'll come out as well.
All right. Well, before we dig deep into, there's a few more things I want to hit on you, Russell. On you with, not hit on you. But before we do that, let's catch up with Bill and see what's been going on in his life. So, Bill, let me hit on you first.
Yeah, I'm having a lot of fun listening to you. You don't have to throw to me. Let's just let Mark go, and we're all going to enjoy that. Hey, so no, the same things in my life that were going on last week are going on this week. Amazed that we live in a world that has VIX at 950 And as you just said, the front month at about 985, although a big jump to next month. January's back up in the 11s, and then it goes all the way out, I think, 7 or 8 months to the 16s. Seems that the long-term future seems anchored at 16. Somebody's hoping we'll get there. I thought your remark, Russell, about to put the tail risk guys last. When the world turns around, those guys are going to be first, and one day there'll be an RMC dedicated to the tail risk move. In the meantime, and for the listeners that don't know, I run a long vol fund and a short vol fund, so I'm not only the tail risk buyer, I'm also, and to some extent, the tail risk seller. It kills me. I mean, I'm sitting here babysitting a trade that I can't get done at a dime with a delta of 5. It's like, man, it's just, just choking on this price level has been tough all year long. And then just to have these things expire worthless has been tricky. But fascinating times. Gosh, 2017, who would have known? Going to be probably the least volatile in history. Certainly in both an expected and a forecasted basis. Amazing times, man. It's I sat down with my sophomore in high school today. He finally said, "Hey, Dad, what are all those screens up there?" And I tried to explain it to him. It's kind of like, but it's kind of like explaining, a 3% mortgage to somebody who's never gone for one. They can't even comprehend what an extraordinary time it is.
That's you're right. I don't know if you know this, but famously, Russell Rhodes it said, "We do not have a single-digit president, a single VIX digit president." And he's right. What we're going to end up having is a low single-digit VIX president, it seems like at this point. So, Russell, there is something important we have to talk about. Now, we talked about it briefly on the Option Block on Monday, but CBOE, CBO,
yes.
Launched a little future known as the Bitcoin future on Sunday night. Why don't you talk about how it went and what your thoughts are, and let's have a little discussion about it.
Well, we were first out of the box with the Bitcoin futures. Ours are one Bitcoin future for each Bitcoin, which when we announced it, Bitcoin was around, when we first talked about it here, Bitcoin was around 2,000. When we announced it, it was around 4,000. And the first argument I got was, that's too small. But now it seems to make an awful lot of sense. We launched, things went very smoothly with the trading part of the launch. Our website actually got a little overwhelmed because a lot of people that trade Bitcoin think that you trade through a website. In fact, you would not believe the number of emails we've gotten where people are asking how they sign up on our website to trade Bitcoin futures. It's a completely different group of people. But we did decent volume. We did about 1,000 contracts in the first hour, and then it kind of settled in. We did around 4,000 or so. We've done around the 2,000 number the next 4 days. And now, we're hearing, oh, this is not quite a success. It's a success. New products take time. VIX futures, the first day we only traded 461 of those. And we really didn't hit good volume for 3 or 4 years. So new trading vehicles or new listed trading products like this, it takes a while. And, volume in the thousands is not so bad. The spreads aren't too bad. A normal spread is $10. Kevin David and I were looking at the trading activity so far this week, and more trades are executed in the middle on the Bitcoin futures than on the bid and the offer together. So, people are getting in there and splitting the difference, which is encouraging. So even though that the spread's wider than the 10-cent tick or the 10-point tick, most people are getting executed in the middle. So there are participants in there. And you could hear a big ha from one of you guys. I couldn't hear who it was, but
it was me.
But that means that there are people hanging out watching it and stepping up.
Correct.
Yeah.
And now one thing that happened, I do want to talk about, and Bill, I'd love your thoughts on this as well. Earlier in the week, the spread between the cash. I don't know what you want to call it because Bitcoin's not cash, right?
Spot.
Let's
call
say
it the spot.
Let's say the underlying and the future was really wide for about 3 days. The spread between the underlying and the future was almost $1,500, and then somebody decided that needs to go away, and it got slammed. Bitcoin mostly unchanged, but that spread went from 1,500 to about 300. Now I think 300, maybe a little bit of a convenience fee there, but what were your thoughts on kind of some of the early trading relationship to actual Bitcoin?
Well, one of the blogs I put up about it this week talked about how at one time you could have bought Bitcoin at 16,600 and sold the January futures at 17,600. Bitcoin, the way that you get exposure or the way you get into it is extremely fragmented. But there's not a place that individuals could buy Bitcoin and short the futures and get an offset with that. So the spread was a little bit wider to begin the week. Now, as people took a look at that, I think some professionals got in there, and now the spread's narrowed down to $300 or $400 on a one lot, and I think it's just a matter of nobody even knew if we were going to trade at a premium or a discount when they came out. I think the premium is almost a risk premium that's the same thing you see in VIX, because Bitcoin can move to the upside very, very quickly and has moved very, very quickly to the upside sometimes. But we're still, kind of getting a feel for how the curve's going to play out. But so far, man, the curve looks very, very, looks a lot like the VIX curve.
Yeah, there you have it. And I was surprised, Bill. I don't know. Have you looked at the VIX, the Bitcoin
VIX
future
coin.
and the VIX coin and how it's going to trade? And I just want to hypothetical you with something. Suppose CBOE lists options, and I'll let Russell have it go with this too. Suppose CBOE lists options, which they probably will. What would you peg the implied volatility of Bitcoin options at? And what do you think the curvature would look like on the curve? I'll throw that at you as well.
Oh,
give you something you can definitely think about.
All right, let me do this for those playing along at home. If you haven't already seen this website, folks, you should. A fellow, I believe his name is Eli Mintz, has put out a term structure on volatility forever under the website VIXCentral.com. It pulls a delayed quote from the CBOE. It's similar to a chart you can find on the CBOE, but super helpful. Gives you a look at historical numbers in VIX. He's added a new button in the lower left-hand corner for the Bitcoin futures. So super helpful. You can not only see the term structure for Bitcoin relative to spot, as Russell said, you can also get high, low, bid, ask, last, and open. So it's kind of interesting to watch it here. I also use, just for giggles, the website coinmarketcap.com. That gives you a look at the price, the market cap, and the volume of, I think, the top 200 cryptocurrencies. This is part of the issue I have with cryptocurrencies, is that I think 5 years from now we're not going to have 200 plus of these. The ICOs that are coming out, this all gets organized and set, figured out at some point. And to Russell's point about what the Winklevoss has said about the future being crypto and Bitcoin, that's probably all true. But my point, as I made on the show last week, was that doesn't mean that Bitcoin at 17,000 makes any sense. I mean, there may need to be a total implosion or regulation or reordering that takes some of this stuff down, consolidates it, and then that second wave, just like with internet stocks, it's the second wave that has the staying power. This first wave, to me, just smells of everything that I've seen go badly in 30 years in the markets. To Mark's question, the applied vol on Bitcoin, boy, I'm kind of surprised by the term structure of Bitcoin. Like Russell said, I think that I was kind of half expecting it to be trading in kind of permanent backwardation, since it's the closest thing that people have to shorting it. I thought for sure the speculation would be on the downside, but it seems to have this weird built-in. Maybe it's the risk premium. But based on the historical trading pattern, the implied volatility's got to be 300 plus, right? I mean, it's going to be insane, and certainly options will come, right? Why wouldn't options be issued by CBOE? They seem to have been, every time they turn around, they're mining something into pure gold, from the SPX bits into VIX and now into Bitcoin. Why wouldn't options be next, right?
Yeah. All right, Russell, what are your thoughts here?
Well, I think the implied vol on options on Bitcoin would probably be very similar to VIX option implied vol, but you'd get more of a smile than you do with the Bitcoin relative to VIX, just because VIX kind of has that mental 9 floor. So if you took if you take the VIX curve and you put a mirror up at the money options, what you get is probably what Bitcoin option implied vol would look like. I mean, I've done some work on how volatile Bitcoin is, and it relative to how volatile VIX is, and they're both very similar. They don't have any correlation between them, but the realized volatility of their price behavior is very, very similar. So I think that would translate into the options, but you would just have just as much risk on the downside with Bitcoin as you perceptually do on the upside. So the shape of the curve would be different.
Okay. Yeah, I tend to agree. Now, I know you can't give a date or anything like that, but the one you and I were going back and forth, and I was like, well, it just takes 9 days to list options, right? And you said, no. The process for
this is different.
Yeah, this is different. Maybe just kind of talk through, because everybody wants to know when options are going to come. Maybe talk through the process of getting these options approved for our audience, so that they can maybe get some clarity as to why this hasn't already been announced and what the timeline might actually look like. Well,
options on individual stocks, that's real easy. That doesn't take a whole lot of time at all. It's if we're introducing index options on Bitcoin, we would have to basically come up with an index that they're going to be based on, but also we would have to go through the SEC, who has not improved anything relative to Bitcoin yet. The futures went through the regulatory process with the CFTC, so we would probably go the route of options on Bitcoin futures, and after filing, it really is anybody's guess how long those sorts of things take.
So it could be a while, is what you're telling us.
Yeah, it could be. Yeah, and I think really it's a matter of seeing the volume in the underlying before you step up and try to start and try to list options on the futures. You want to make sure you got some futures volume first. So yeah, they don't include me in these discussions.
Yeah, no, I know.
Which is fine with me.
To my point, and we will get to this shortly, I can imagine a scenario where, a Bitcoin options far exceed the kind of daily value of the amount of futures trading, similar to like a VIX weekly option.
Oh yeah.
I can totally see a scenario like that.
Mm-hmm. No, that's we're doing decent volume without options. If we get options, you're going to see a big increase in the amount of futures trading as well, because it increases the ecosystem. To put it, that's one way to put it.
To put it bluntly, yeah. So now that we've talked Bitcoin, getting back to VIX, and then we'll get to everyone's favorite segment after this. What do you think of this VIX curve? I'm not surprised by the December, but are you surprised that they're letting January get creamed the way they're letting January get creamed, guys? January is around 11.5, but normally when the VIX is below 10, the spread between the second month future and the index, the cash, is more like 2.5 or 3. Today it's looking like it's bounced between 210 and and, you know, like 190. What are your guys' thoughts on kind of on the just plastering of volatility futures? Are we getting a little ahead of ourselves on Christmas or what?
I was waiting. Bill hadn't had
Yeah.
the chance to talk much, so I was trying to pause. So go ahead, Bill.
Thank you.
You bet.
Jump ball. I'll take it. Yeah, I think, you know, here we are at the end of the year on the mellowest year in history, what's largely going to be the mellowest year in history. It seems like we're going to get the tailwind from this tax package that's going to push us through. You know, net neutrality doesn't seem to bother anybody. I think we're building in the Santa effect, and yeah, it just you know, we seem to be anchored out there at 7 months out, and so you pull the front part of the curve down. The second month is coming with it. The spread, however, you know, it is $2, Mark, but it's still 20%. So in a few days, that will become the 100% exposure of the VXX. You know, and at that point, the contango will be, I don't know, 15, 16%. That'll still be a super fat premium for those on the other side of that trade. So, yeah, I'm just, you know, again, I'm just amazed that we're just ice cold chilling. It seems like we're going to lock this year up. I think the last week of the year, on years like this, when you've had so much bullishness, the last few trading days before Christmas are always wild, and they're anybody's bet as you know, hedge funds, you know, lock in their profit share for the year, and everybody sort of closes out their positions. We could get a little bit of a sell-off, but otherwise, boy, it just seems like they're signaling us in with flags for a nice, gentle landing for 2017.
Yeah, Russell.
Well, I think it's just a lot of risk coming out of the market, and then you know, we tend to have more often than not early year rallies. So I think maybe we've got the last risk thing behind us, because it appears that the market is discounting a tax deal, and then you're like, okay, well, what bad can happen in early 2018? Well, not much. So you know, I just think that's the pattern of what's going on right now. It's just risk coming out of the market, basically.
Yeah. And just an incredible amount of risk coming out of the market. Like I said, I'm not sure I've ever seen, you know, the futures trade quite this low. It's this low this early on. You know, I'm not unused to seeing an 11 VIX future, just not like this. And you know, it'll be interesting to see what trading looks like. As I look at VIX futures, I think they look like the January future looks like a buy. I mean, you can buy next the D27 future for about 1030. It's
right
hard
now
to imagine.
Yeah.
I mean, why? That seems pretty inexpensive to get to own, you know, 2 weeks, including the back end of a potential deal falling apart. So, you know, I saw some value there, but you know, it's just really been fascinating to see the complete discounting of volatility. All right. Well, now that I've had plenty of time to talk the big stuff, let's talk about everybody's favorite section.
Oh my God.
You know, when I'm out on tour and I'm talking, and people always say, you know what my favorite section of the show is, and I say, well, what? I assume they mean me, and then they go,
no,
Russell, and then they say Russell's Weekly Rundown.
Hell yeah.
Now, Russell's Weekly Rundown.
I was getting ready to say I was not going to talk until the music. I'm not talking until the music. So, you know, where's that other piece of paper? Damn it! I had two pages, and one of them disappeared on me here. Where are all my Monday, Tuesday trades? Mark Sebastian knows they kicked me out of my good office, and I'm still kind of living out of boxes. All right. So Monday, probably the biggest weeklies trade of the week was pretty early on Monday. Somebody does not think low volatility is going to be the case early next year. Somebody bought 30,000 of the Jan 3rd 16 calls. They paid between 36 and 40 cents. They paid closer to 40 cents than 36 cents. It was pretty, it's like they took a couple of offers and then at 36 cents and then pushed it up pretty quickly. There was also some bearish trades. I saw a lot of bearish trades with the December 27th expiration. And I guess we can kind of understand that it's Christmas week. But there's some really, if these two trades are expecting us or are planning on holding through expiration, they're looking for a 990 or a 985 settlement for the December 27th contract. So they bought 200 of the D's 27th 10.5 puts for 60 cents, and then because it's the same size and the same option, and just about a half hour later, somebody bought the same options for 65 cents. Bought 200 of them on Monday. On Tuesday, somebody bought the only December 13th trade I came across. I always like to try to find trades early in the week that look like they're gearing up for the weekly settlement. Somebody bought 100 of the D's 13th 9 calls for 95 cents. If they held them through the VIX settlement on Wednesday morning, they made 4 cents because settlement was $9.99. I know. Somebody bought 510 of the December 27th 9.5 puts, an outright purchase, and paid 15 cents for them. They are really expecting they're expecting the market to limbo lower during the Christmas to New Year's week. And I can kind of understand the mentality behind that. Somebody also taking the other side, but using the puts, sold 200 of the D's 27th 10.5 puts for 70 cents and went down a point and bought 200 of the 9.5 puts for 15 cents, took in a credit of 55 cents. They get to keep it if VIX settlement on December 27th is above 10.5. On Wednesday, and this one kind of scares it's frightening to me, but somebody outright sold 260 of the Jan 3rd 12 calls for 65 cents. Hope nothing bad happens between now and the second trading day of 2018. Somebody also on the other side of things bought 250 of the January 3rd 10 puts for 20 cents. Lots of just outright trades, not a lot of spread trades. It became harder and harder to find trades. Somebody sold 400 of the D's 27th 10 calls for 85 cents. They did this on Thursday. And then taking the other side of that, somebody thinking that if we do get a volatility event and there's not a lot of liquidity because all the backup traders are on the desk that week, somebody bought 710 of the D's 27th 13 calls and paid 35 cents for them. Today, damn near impossible to find a trade in the weeklies, but somebody did buy 100 of the D's 27th 16 calls for 15 cents. So very few spreads, lots of little directional trades. Either and if I'm trying to get in the mind of the traders on them, it's looking for a really low VIX settlement the week of the last VIX settlement of 2017, or thinking if we do get any sort of volatility event that it might be pretty violent because half the traders are roasting chestnuts by the fire and stuff.
Oh yes, the correlation between roasted chestnuts and low volatility. I don't know if you knew that, Russell. That's a long-term correlation that we've talked about on the trading floor for years.
Absolutely.
The chestnut indicator.
Roasting chestnuts. It is. It's the CI, as we used to call it back in the day. Yeah. The other things that we, in the big index, we did see 50 cent, quote unquote, come in and trade a bunch. We saw some pretty decent put buyers. And aside from that, we've kind of seen our normal, normal stuff. Now, Russell, I do have some of the major presentations you guys talked about. Do you want to, at RMC, do you want me to ask you about them individually, or do you not want to get into too much more detail on what we did?
You can.
All right. So,
hey, Mark.
All right. So,
Mark.
Yeah.
Can I chime in? I want to point out one more thing before we move on from the weeklies, just because I'm sitting here in amazement. So somebody bought 25 of the December 27th 8.5 puts, and they only paid a penny. But I mean, you think about that. Yeah, 8.5 puts. There's now actually open interest is now 30 contracts at 8.5 with what a week to go. It'll be interesting to see if that pays.
Wow, that is fascinating. They bought the 8.5 puts.
They bought the 8.5 puts. It looks like as part of a pair. They only paid a penny on. It's offered at a nickel, no bid, but they only paid a penny. But even at a penny, if it goes to 840, right, you're a 10x return.
Wow, that is. And I'll tell you, I've been trying to buy the December 27th 11-16 call spread and trying to pay 30 cents. I bought it small for 32. I just think that's you get to buy a 6-point vertical, $1.50 out of the money, and they're going to charge you 30 cents for it. Some of these premiums are really pretty light. That is one thing that I have that I did notice in the weeklies. But yeah, let's get a look at what happened in RMC, Russell. Why don't you give us a little rundown of? Let's start with the Winklevosses. You said they know their stuff, and you did travel some. Was there anything anything profound that our listeners should know that you feel okay chatting about right now?
Well, they do a really good job of articulating why they believe in the Bitcoin. They do a really good job of equating it to. They started calling it Gold 2.0 because the way that it is created and the way that the supply is diminishing is very similar to gold. They actually think of it right now as more of a store of value as opposed to being something that you are purchasing to just turn around and start getting involved in transactions with. And they're big fans of that. They did say that they have not departed with any of the Bitcoin that they own. And I do know that they've stated publicly that their goal is to always own at least 1% of the outstanding Bitcoin. And I think they're keeping up with that goal. They have kept up with Ethereum as well, which is also offered at the Gemini exchange. They put some money into Ether, and they did get asked about other cryptocurrencies. They're all over the place. There are, there's the Mark coin that you can buy at the train station in Riverside in the morning. They just basically have said, they were asked about that, and they said they will probably start adding another cryptocurrency to the Gemini exchange probably every 6 months or so. So I'm really curious as to, and they did not give any indication whatsoever as to what's going to be next. There was something else that happened today. Oh, yeah. Kind of the assumption was it would be Litecoin, but today somehow the market cap for Ripple has overtaken Litecoin.
Ripple
and at one point it actually overtook Bitcoin Cash during the day today. So I'm, if they're going with the one that's the most accepted, that might be the next one that gets a boost. So
Ripple is in partnership with Microsoft, right? That's a pretty nice partner to have.
Yeah.
And that is, I'm not surprised that Ripple has ripped, as you might say. So Ripple or Litecoin, one of the nice things that traders are using Litecoin for, because its blockchain is so fast, it's allowed for easier movement between the exchanges. Now, Bill, one thing that I don't know if Russell's been aware of this, but Ethereum had a huge problem earlier in the week. The Ethereum marketplace and Ether coins. I don't know if you heard about this, Russell, but CryptoKitties almost single-handedly took down. Ethereum. So, Bill, since we last talked, have you how many crypto kitties did you buy?
Actually, so I did a video. I do a video once a month on my website about investing, and I did Bitcoin, and it was consistent with what I said on the show last week that, look, I'm too old and stupid to get involved in it. I don't think anybody with any material amount of money should put it into there, not because it can't go up, but because people don't know how to handle it when it goes down. Nobody sets a sell target. Winklevosses are $1 billion in something that they haven't cashed in. To me, that's not worth anything. But what I did do is I've encouraged my sons who've expressed interest in doing it. My oldest son's 20, he's in college. He said, hey, I want to put $500 in. I'm like, that's the best $500 you're ever going to spend. Whatever becomes of that $500 and the experience you have in watching that and the feelings you're going to have and the overwhelming temptation to buy and sell, that's going to be great. That's going to add value for you as an adult. And then my 15-year-old came to me. We have 4 teenage boys. So a second one came to me today, said the same thing. He sold out of a couple stocks into Schwab account, and I agreed to front his U.S. bank account. He's going to be moving money from his bank account into Bitcoin, and as I understand it, that's the medium by which he can use to purchase Ripple. So, the only kind of Ripple I know, we used to drink behind the school in middle school. This is a different Ripple for my middle schooler.
Oh, wow. I was thinking of Fudge Ripple, which is my favorite ice cream cone. It's been interesting watching these. Last week I bought, like your son, I spent $500 just so I would pay attention. And I learned a lot about kind of how these things move. It was really fascinating. They're like stocks on steroids is really what they are.
Mark, when I was in college, when I was in studying finance, we did a lab, and the lab was like they brought 100 finance students into a room, and we went on a computer, and we were given the hypothetical ability to buy and sell a security, and it was all over the board, and they were tracking in a behavioral sense what did people do in light of it, and I'll never forget in analyzing the results how truly bizarre our mind is and how it works totally against us. And when there's that much greed and that much fear on the line, and I'm not talking about, the S&P that fluctuates 20% in a bear market, but things that can go up 4,000% and come back down 75%, do really demented things to people's minds. And the trading behavior is completely self-defeatist. And I think that's what's going to end up happening with a lot of the traders in Bitcoin. Even though the currency may survive, I think the average person's experience is going to be terrible. But again, I invite people to do it. Just do it with a small amount. Do it with an amount of money that you say, if I lost it all, no big deal, right? And for people with more money, that might be a larger amount. For my kids, $500 is not going to set them back in their career 30 years from now if they lose it all. This is a phenomenal experiment that we're part of. But to me, it's video gaming. So let's have fun with it. Let's just be reasonable, people.
I agree. Now, Russell, there also was my understanding is there also was they talked benchmarks. So any updates on the benchmarks for
No, it was just kind of
CBOE?
it was just kind of a review. There was nothing new introduced there.
All right.
It just we didn't really make any new announcements at this thing.
Okay. So no new announcement.
Yeah, we tend not to do that at the Asia one.
Okay. And trying to think, there was looks like there was a presentation on, no, it's all benchmark stuff.
Mm-hmm.
And volatility-based indicator discussions at RMC Asia. What anything interesting happened in that discussion?
Which one?
It was, let's see. What was the guy's name?
There was one?
John Hyatt. John Hyatt.
John Hyatt. Yeah.
His presentation.
Yeah. He and actually Tim Edwards did a really good job as part of that presentation. And Tim has put out like a 40-page white paper that you can find at the S&P indexology site, which was really fascinating. Just talked about the predictive nature of VIX and what it actually does tell you and what it does a good job predicting. It actually does a good job of predicting kind of the dispersion of returns. Something that you'd automatically think, but he kind of proves it. What else did you say with respect to that one? It carries across to pretty much any market that has a volatility index. The one market that the volatility index on that market that doesn't work is actually VIX.
Oh.
The VVIX is not a very good predictor of, and he thinks that's really because of the unidirectional nature of VIX. You don't get a big spike to the downside or a big drop, a quick drop. So that was probably the nicest finding out of that.
That's fascinating.
Yeah.
So any other big things out of RMC that we should discuss, or have we kind of hit it?
I think we kind of hit it on both, all the highlighted type things. Again, I'll be putting blogs up over the next week or so.
So this would also be where Mark might run down his top VIX strikes. Here's what I'll tell you: is there's almost very little change in order from last week. So the only big thing is our VIX whale. Or VIX, what do they call him? The VIX elephant. He switched. He moved in the last week, so I believe that led to some changes in how we're structured. The VIX Jan 25, 12s, 15s, and 20s are all where everything is running because he has moved his position. So with that, let's move into. We got time here. Let's do one or two questions on the volatility.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right. Don't you love that? So make sure you're sending us questions, guys, because if we don't have questions, we can't answer. This is a question from Alvanot, and it's a quick question, but, I'm going to modify it a little bit. The question was, can you trade VIX index itself, not the future? The short answer is no, but Russell or Bill, what are some things that you can trade that are very similar to the VIX index?
Russell, you want to start?
Sure. The thing that actually has the closest relationship on a day-to-day basis with VIX in the ETP space is the leveraged ones. They actually follow it the closest. If you're in the futures market and subsequently in the option market, the front week is the one that always has the highest beta relative to VIX. That's the closest you can get there.
So the closest thing you can really get to the VIX, if you want to track it, is the VIX, the weekly option, the weekly future, which, it looks a lot like the VIX, like the day before expiration. That's 100% true. The other thing, and this is a bigger contract that I might throw out, and it's only over the counter, but I always thought the VIX and a 30-day variance swap were very similar to each other. Am I wrong in that, Russell or Bill or? Guys?
Russell? Well, so the 30-day swap is based on realized, right?
Yeah. I don't think there's a connection there at all.
Oh, really? Well, isn't it? I always thought a 30-day variance. I always thought the price of a 30-day variance swap, what you would pay for it, was almost exactly
like VIX.
Like VIX.
Right, because it's priced
in the
expected. I don't know.
It's pricing in the.
Russell, you've never traded those, have you?
I haven't traded them, but there's not the same sort of risk premium.
It's probably closer to at the money. Probably closer to at the money.
Exactly. That's exactly right. Yeah. Yeah.
No wings.
Yeah.
Yeah. So I think you guys made reference to there are two ETFs that are designed to lean closer to under 30 days, right? If you own VXX as your proxy for VIX, you're getting something that's got a beta of around 0.43. This futures 30-day out, responded about 43% of the move of VIX. The VMAX and the VMIN are two of the ETFs that are long and short that are designed to be. I think they're shooting for like a 9-day. It's not quite as tight as the weeklies, but if you don't trade weekly futures and you don't trade options, your best ETP is probably the VMAX, the VMIN, or as Russell said, like the UVXY, which is sort of a 2x in the VXX that sort of takes that beta from about 0.5 and doubles it up. So it gets you close to that. But, these should all come with the same warning labels that a pack of cigarettes come with, right? I mean, we're casual about these when we talk about them, but there's a lot to them, and just be super, super careful in getting into these instruments.
Yeah. What's the old saying? Don't hold UVXY for more, when we're in a normal market, you don't want to hold UVXY for more than, a few hours. But yes, UVXY does track pretty nicely. All right. Well, that's fascinating. I'd always thought that they were pretty similar, and I am staying corrected. All right. And here's one more, and then we'll move on. Hi. We've already answered this one, and the question this is from Anthony at Anthony F. G. Garner. Do you really reckon long options is profitable? In other words, is there a way to be, I guess he's asking, is there a way to be profitably long options to be a profitable option owner over time? Maybe he means over time. Is there a way to do it? And my answer would be, yeah, but it involves taking delta. I don't know. Bill, I know you're a notorious option seller. What are your thoughts?
Yeah, so I did an analysis, and I think this is still up on my Twitter. It's at bvalentinecfa.com. At the probability of trades expiring in the money using a 30-day to expiration based on the volatility, both indices as the ETFs as well, you will find consistently long puts on VXX, VIX, and UVXY from deltas between 30 and 60. They will expire in the money 50 to 66% of the time, and above and beyond the premium you pay. So yes, generally speaking, especially in stuff that's trading around vol, there's a big fat risk premium built in, so that the seller who's taking on that risk gets paid. And so the bias unequivocally is against buyers of options trading against at least the volatility instruments, but that doesn't mean you can't win. I will be very frank right now. I am long puts on one of the volatility indices and nicely in the money. So you can win. You can't make the case that you should never be long an option. The options losing is one of the statistics that's overquoted all the time. There are more winning trades in options than people think.
All right, I like it. All right, so now with that's a couple of good questions. Let's leave this our favorite section and get into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right. Well, it's the crystal ball. This is the section of the show where we make wild guesses at what's going to happen. I forgot I'm the host. And I don't know, Russell, I believe last week all of us missed pretty badly. But I think Mark actually had the lowest guess. I think he was like 9.5 or something like that. I'm trying to see. Do we have a record in here of this is you know what? I guess 9.15 for the VIX. Goes to Russell, gets 35. Goodness. Bill was 10.
All right.
And so if you look right now, the VIX is, I'm going to pull up a quote right now. The VIX is
941.
941. So I'm going to go, and since Mark's not here, just declare myself winner. I was 26 cents away.
I love it.
He was 34 cents away. I did win, but I would have declared myself winner anyway. And I'm going to go with an even 10. Bill, you're up next. And since the ghost of Russell missed so badly.
Just the ghost of Russell missed so badly. Hey, I'm gonna let's live on the edge. I'm gonna go below the 9 handle. I'm gonna say 8.99 in a year of records. Let's just add that to the list.
All right. You were gonna say 8.99, Russell?
No, I was gonna say 8.99 just to be stupid, but okay.
No offense taken.
I know. I'm messing with you. So, so am I next now? Are you making me go now?
Yes, you are next. Yes, it is your turn.
Okay. I am going to say 974, and I'll probably be the high guess.
I like it. I think that if they do get a budget deal done, Bill might be right. And if they don't, I think I'll be right. Should be fun. And so this sounds like we're getting toward the end of the show. And before we let everyone go, why don't you update us on I just listened to Bill talk for a good hour. I think he's brilliant. How do I find Bill Valentine?
Hey, ValentineVentures.com. Let me just do a quick public service announcement. I know we have a lot of short vol listeners to this show. Please be covered. If you own one of these inverse VIX ETFs, either have a small amount or own an out-of-the-money call against the VXX in case that thing goes against you. If you are selling options, own the wings. This is not the time to get caught up in your own hubris about what a great year it's been. Please be protected. Use your derivatives prophylactically going into the end of the year.
I love it. I love it. I would concur. A 940 VIX is usually not the time to be just unloading strangles. Russell, what's going on at CBOE?
Just trying to finish up an education site on the volatility ETPs, and then my work with the Options Institute will be done, and I can move on to bigger and better things.
Ooh, I can't wait.
Yeah,
and
exciting stuff.
Obviously, that is exciting.
Mm-hmm.
Well, and as for my case, my book is out, Trading Options for Edge. It's been out for a couple of weeks. It sold out. The entire U.S. stock, British stock, German stock, and Canadian stock sold out. But the good news is that there's more over the Atlantic on their way to the beautiful shores of New York City. So go to Amazon and buy Trading Options for Edge by Mark Sebastian. And with that, I'll wish everybody a great day, a great weekend, and we'll see you next time on Volatility Views.
Volatility Views is brought to you by CBOE. CBOE is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We're the industry's leading force driving access to global markets. A better trading experience and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit CBOE.com. That's CBOE.com to learn more about our expanded offerings.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.